So you've got your eye on Palantir, right? Specifically, this whole idea that they could hit a $1 trillion valuation by 2030.
Ambitious, to say the least.
Right. Well, we dug into this Motley Fool article that breaks down their potential. And let me tell you,
It gets interesting.
it really does. There's so much buzz around AI right now, and companies like Palantir who are already established in data analysis.
They're seeing a surge of interest, definitely from investors.
Absolutely. And to be clear, this isn't your typical software company just slinging code.
Oh, right.
We're talking about platforms like Foundry, which helps governments make sense of massive data sets. Think intelligence gathering, disaster response, that kind of thing.
Right.
Then there's Gotham, designed to optimize complex operations, making businesses wildly more efficient.
Mm-hmm.
But the article really zeroes in on AIP, their AI platform, as the potential game changer.
And here's where the timing gets really fascinating. It's not just that Palantir has powerful tools. It's that they've got them right now.
Yeah.
Just as the demand for AI solutions is
Skyrocketing, exactly. Everyone, from Silicon Valley giants to Wall Street firms, wants a piece of the AI pie.
And they're not exactly starting from scratch, are they? The article highlights that their customer base grew by a hefty 42% last year.
Yeah.
But get this, their U.S. commercial clients up by a staggering 69%.
Wow.
That's not just growth, that's practically a stampede.
You said it. And this is where we start to see what the article calls that hockey stick growth pattern. Revenue steadily increasing, but with the implication that AIP is about to send that growth curve practically vertical. For those unfamiliar, a hockey stick growth pattern is where a company's revenue remains relatively flat for a period of time before suddenly skyrocketing upwards.
Okay, so the potential is clearly there. But let's address the elephant in the room, or should I say, the $1 trillion elephant. Going from a $50 billion company to a $1 trillion titan in 6 years is, well, it's a moonshot to say the least. What does the article say about their chances of actually pulling this off?
Well, the article doesn't shy away from the numbers. Right now, Palantir is bringing in about $2.3 billion in revenue annually. And while those analyst projections of 30% annual growth are impressive,
even with that kind of growth spurt, it still feels like we're talking about a serious climb to reach $1 trillion, right?
You're absolutely right to be skeptical. Even if we were to take those rosy projections and stretch that 30% annual growth all the way to 2030, they'd be looking at about $13 billion in revenue.
Okay.
Now, to understand why that's still a significant leap from $1 trillion valuation, we need to consider what's called the price to sales ratio.
Okay, break that down for me. What's this ratio all about, and what does it tell us in Palantir's case?
Sure. In the simplest terms, the price to sales ratio, or PS ratio, tells you how much investors are willing to pay for every dollar of a company's revenue. So a high PS ratio suggests that investors are very optimistic about a company's future growth potential. In Palantir's case, their current PS ratio implies a need for significantly more revenue than even those optimistic projections suggest to justify a $1 trillion valuation.
So the math is a little iffy, to put it mildly. But the article also mentions that Palantir's stock price is being driven up by the current AI frenzy. It's like everyone on Wall Street is suddenly seeing dollar signs in the world of artificial intelligence.
It's true. Valuations can be a bit like a runaway train sometimes.
Yeah.
Remember the dot-com bubble?
Oh, yeah.
Everyone was so excited about the internet's potential that valuations soared, but then reality set in. Not every company lived up to the hype.
And we have to imagine Palantir isn't the only player in the AI game, right?
Not by a long shot. The AI field is attracting some of the biggest names in tech, and they've got deep pockets and plenty of talent. For Palantir to justify its current valuation, let alone hit that $1 trillion mark, they'll need to not only maintain their current growth, but actually accelerate it. And that means fending off some fierce competition.
So what you're saying is, it's not enough to just ride the AI wave. They've got to be the ones steering the ship.
Precisely. And that brings us to another crucial factor the article highlights: the cost of Palantir's products. Their platforms are powerful, no doubt, but they come with a hefty price tag. The article points out that this could actually be a limiting factor in their growth.
So it's almost like they're selling Ferraris, right?
Right.
In a world that's increasingly looking for reliable, affordable transportation,
Exactly.
you might get the luxury buyer, but can you scale that to reach a mass market?
That's the $1 million question. And it seems to be a key tension point the article kept coming back to. Is Palantir aiming for a smaller slice of a very high-end pie? Government contracts, intelligence agencies, maybe a handful of Fortune 500 companies.
Yeah.
Or are they going to have to figure out how to make their products more accessible to a broader range of clients?
Because if we're talking trillion-dollar valuations, they're going to need a lot more customers than just a few government agencies and Fortune 500 companies, right?
Precisely. And that raises some interesting questions about their long-term strategy. The article didn't dive too deep into their plans on that front, but it did suggest that their current trajectory makes $1 trillion by 2030 seem like, well, an incredibly optimistic goal, to put it mildly.
It sounds like a lot hinges on whether they can crack that code of balancing their high-end offerings with a more scalable approach. It's a classic tech dilemma.
It really is.
Do you go niche and exclusive, or do you try to reach a wider audience?
Right. And for you listening, this is something to keep in mind as you follow Palantir's journey. Keep an eye on their client base. Are they bringing in more businesses outside of their traditional government and intelligence sectors? Are they making any moves to adjust their pricing or develop more accessible product tiers? Those are the kinds of signals that could tell us a lot about their long-term ambitions.
So while that trillion-dollar target might be a long shot based on the numbers, it doesn't necessarily mean Palantir isn't a company worth watching. It sounds like they're at a pivotal moment where their strategic decisions could have a huge impact on their future.
Absolutely. Their work in AI and data analysis is undeniably significant, and they're operating in a space that's only going to become more important in the years ahead. But as with any company, understanding the fundamentals, their target market, their growth strategy, their ability to adapt to a changing landscape is crucial for assessing their long-term potential.
Great advice, as always. Well, that brings us to the end of our deep dive into the world of Palantir and their quest for $1 trillion valuation. It's a fascinating story with plenty of twists and turns still to come, so we'll be keeping a close eye on their progress. Until next time, keep exploring, keep asking those tough questions, and as always, happy diving.